All right. Everything looking good. Should be live any moment. Let me know in the chat if you can hear me coming through loud and clear. In the meantime, welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. It is 8 p.m. Eastern Standard Time on Sunday, June 5th, 2022. Hey, what's going on, Prague? The answer to your question, he said waiting. Can you tell me how to get the TJD Master? Very thankful for your streams. I appreciate you, man. The TJD Master is exclusively available to group members. You basically just make a one-time contribution. Helps to fund the channel, and then you get access to the indicator, as well as the most recent TJD, well, the TJD Master, and then the most recent version of the Jewel. And then we have a Discord group as well. And you can just email me about further information. Yeah, that's it, Pride. So just shoot me an email. I can give you all the details. You get access to the indicator. You get access to the Discord group. And then also the most recent Jewel Thief as well. So that being said, I'm assuming it's coming through loud and clear. Yes, CryptoTrendTrader@gmail.com. And if you forget, you can always go to the YouTube contacts, like the information page for my channel. But I mean, it's pretty simple. So, and I'll get back to you pretty quick. What's going on, KOs? Good to see you. All right, let's go ahead and jump right in. So we had a pretty relaxed weekend with crypto and everything. But obviously we've been paying close attention to everything taking place. We know that there is a bunch of key factors right now in the market that are basically determining direction, and we're at some pretty key pivot points as well. We also have the fresh month ahead of us. So we've been recently taking a look at our monthly closes on various assets, asset classes, and they've been signaling us, essentially what is to come. So while we do expect, some big moves going into the future, we know that typically the summer has a little less volume and, a little less excitement. But that doesn't mean this summer has to be the same as every other summer. So there's a lot of crazy stuff happening on the world scope at the moment. So looking at TNX, so we did continue to rally up and closed near the highs of this push off the bottom. We flipped the 821 back bullish again. And again, we're very close to the highs. So I'm still very bullish on TNX. It looks like that was enough to reset the daily. Daily looks nice now. Came out of the bearish control zone. Hard buy signal. Bunch of green histograms. The next key obviously will be, does it come up here and put in a new all-time high or a, local high? I mean, realistically, we're not far off of that high. We really didn't reset that far back down. So I think it probably will. But we'll see. If all of a sudden it suddenly rolls over, maybe it does go deeper. But long term, I really think we're going to see this trend break out. At this point in time, I mean, the 200 exponential has crossed above the 200 simple. So even on like our weekly time frame right here, even though we have multiple red histograms in a row, we have a hard sell. We're still inside the bullish control zone. Even while we're at these elevated levels, everything is still postured bullish right now. We still have the 8 and 21 on top of each other. We have crossed now the 200 exponential above the 200 simple, and both are blue. That's literally like the beginning point of a strong uptrend, as when the 200 exponential crosses above the 200 simple. The same as when we see that 200 simple cross above the 200 exponential, it's the trend rolling over to begin the downtrend. That's essentially the same thing. Now we have to be careful though, because a lot of times we'll get that counter trend move, which is essentially the retest of the weekly trend. So it wouldn't be crazy to think we could get yields below 2% again at some point in time in the future, on this weekly chart. It doesn't mean it has to be anytime soon. Could be very soon. But realistically, right now the trend is still very strong to the upside. the pullback would literally just be a retest of the breakout. We technically had one right here, but we usually see a reversion to the mean, at least close to it, after the trend confirms to the upside. So weekly chart right now, showing a little bit of weakness. I could easily see another push up here to a new high as we're still inside the bullish control zone. And on the weekly, TNX still looks pretty strong. It definitely looks like it's getting a little tired. And then when we look at the monthly, we're essentially confirming this breakout now. We're above the 200 exponential and it's blue. 200 simple still has not flipped over blue yet, but very, very close to it. And again, the monthly time frame extremely bullish as well, for some potential long-term continuation. So right now, still strong. We have to be wary of a potential pullback, but still very strong. And then we look at the 20-year Treasury, TLT. We're still hanging out around that same area until one of these things breaks in a direction. Obviously we can't really make up our mind what's going to happen here. But if the yield does end up going higher now, that's going to correspond with essentially this going lower and new lows. We're at very strong support here, but when we look at the longer time frames, it's not unrealistic to think that we could have, a further downside retest, possibly even a new low, and then we see a bounce from there. But now on the monthly chart, this is looking dangerous. The essentially 20-year Treasury bond market is essentially turning bearish. So if we're flipping into a bear market now on this, that's definitely a big deal and worth note. And obviously would be corresponding with essentially a breakout in our yields. US oil next. So again, we came back down, retested the top of the channel, found support, and then pushed back to the upside. New highs, we're back at 120. We know the peak through here recently was like 130, and then we have the all-time high, slightly higher than that. Again, still very bullish on oil. Not going to try to pick the tops on this one. Same way we don't want to try to pick the bottoms, but we know the monthly chart here is still very, very bullish as well, as we are essentially starting a long-term trend. This one is earlier in flipping the trend because the 200 exponential is still below the 200 simple. And we were just looking earlier about the 200 exponential crossing above the 200 simple and how that's the beginning of the real strength in the trend to the upside. So in many ways, oil on the monthly is just kind of lagging behind, but doing the similar thing. It's confirming that bull market on a monthly time frame, but it's just still early on in the confirmation process. So Dow Jones, we basically just stagnated last week. We essentially didn't do much of anything, hung out around that level. We still have a little room to potentially move higher to the upside. But again, I do think that we're going to just run back into the 200 exponential and simple and probably get rejected around the area and then go lower. We know that this bounce in the Dow Jones was off of our 236 fib and it bounced it almost perfectly. So realistically, all we did was confirm that we probably have a local top, or at least a Fibonacci local top for now. So what we're expecting is essentially a pushback up, retest of a 200 exponential and simple, rejection at the top of the range, and then, new low. Essentially just stepping our way down to eventually the 382. But before that comes, we have our highs from the pre-Rona dump. So anything that hasn't touched those highs yet, that's going to be our next target. But essentially the main targets are almost everything has hit its 236 already. Many things have already hit their pre-pandemic dump, like the top. And then the next is the 382. And then there's a couple things that have already blown through all of those things. So the next two key areas are obviously the next Fibonacci, which would be the 0.5. And then also we have either weekly or monthly 200 moving averages. And then finally, we have the actual pandemic lows, which only a few things are that bearish that they're already at pandemic lows. But just keep into mind the relative strength of each of these things compared to various other charts that we look at. For instance, if we compare the Dow Jones right here is fairly strong still because we're still well above the pre-pandemic levels. We're still off of our highs quite a bit away, but we're also off of the pre-pandemic highs quite a bit as well. Many other things are already down at or below the pre-pandemic levels. And then again, like we said, some are already, working through the price action and close to pre-pandemic lows. So that's what we're really paying attention to. But again, we've been really, really watching this monthly close and how important it is. The Dow Jones actually stayed on top of the 21. But again, the relative nature, how many of these other ones are already below the 21 and how many of them have the 821 cross. but all of them have the hard sell signal and left the bullish control zone. All red histograms, red slope line rolling over. I mean, everything we're seeing on a monthly time frame now in just about every one of these markets, with the exception of pretty much energy, is absolutely wrecked right now, and showing serious bearish signs. Not like we just, oh my gosh, all of a sudden we're bearish. Like, you guys know we pretty much called the top perfectly on stocks and crypto, which we don't even like to call tops, but when they're as evident as they are, it's easy to put your neck out. I mean, when it's a gimme, I mean, it's not a gimme. I shouldn't downplay it, but, there was a lot of signs. Let's be real here. Usually top 10 bottoms are not that obvious. So SPY next. Again, we're going to look at that relative strength to the other asset classes, or indexes that we're looking at today. So again, we see that bounce off of the 236. We have our next targets down, essentially a retest of the pre-pandemic highs, which look how we're still well above those. And then obviously we tagged the 236, came a little deeper than the Dow did, but we're still a ways away from the 382. So again, still strong for now in comparison to most everything else we will be looking at tonight. And then when we look at the chart here on the monthly, just go ahead, turn off our drawing tools, and we just pay attention. We're just sitting on the 21, just the same, and essentially same signal, same everything as the Dow Jones. So the S&P and the Dow are trading with extremely, extremely high correlation at this point in time. Both the charts look, almost identical. Next, we have NASDAQ IXIC. We'll see it came down to the 382, with the push back up potentially to the 236, retest of a 200 exponential and simple. So we're paying attention to that. We came down much deeper. We came down through the 382. 0.5 is our next target, but then look, we have the pandemic, high right before that, just under, what is it about? Just under like 10,000. It's 96, 98, 9,700. And then again, when we flip over to the monthly and just take a look at this, just to keep, an idea of how strong or weak these assets are. This monthly candle broke through 2 months ago. We broke through and closed below the 21. And then we had a retest and failure indecision candle close at a new low and below the 21. And now it looks like the 821 are about to cross. And it looks like we'll continue to print lower lows on these candles. So the NASDAQ looks very, very weak on the monthly. Again, same signatures, all bearish on the monthly. So, anybody that uses any form of like actual technical analysis or strategy has to see that the charts look very, very bearish right now. And this isn't like the type of thing where it's like, oh, everybody's bearish, we should get bullish now. No, the charts look really bearish. They're picking up momentum to the downside, and people are still looking for opportunities and trying to buy the dip and pick the bottom. That is what it looks like when people are about to be, capitulated on. It's like the disbelief stage. I'm really seeing like in crypto markets too, like that 2018, just really boring sideways action when people just say, oh, we're just putting in a bottom. Next stop's the moon. And then of course you sell off 50% in a month. So next we have Russell, again, very, very weak, came all the way down to the 382, also tagged its pre-pandemic highs. How pathetic is the Russell? The most pathetic so far today. So that being said, still very far off the pandemic lows. Next target though, because we already tagged the 382, and the pandemic highs would be basically, when we come back down, a retest of that level, and then essentially the 0.5, and there's still quite a bit of ways down, to the bottom here, but still Russell obviously looks worse than anything. Well, any of these. When we flip to the monthly, though, the Russell actually is holding up slightly better than the NASDAQ is, as it's just about to have the 821 cross. But again, everything else very, very bearish. I did have a nice bounce, which essentially stopped that cross from happening last month. But wouldn't get overly bullish on this one just yet. It essentially just bounced off of probably the most important support that it had, because not everybody's going to use Fibonacci levels, but everybody can look at this chart and see where the previous high was. And in this case, this actually tells you even further how pathetic the Russell is not only is it not holding up well right now, but it was already pathetic before the pandemic, because this was our 2020 highs in January, and this was actually 2018 highs prior to that. So we had already put in a lower high from 2018. So it never recovered to new highs like we saw in all the other indexes. to put in a pre-pandemic new high. So it wasn't until actually after the capitulation event happened, and then we got this big juicy green candle right here. We took out the 2020 and the 2018 highs all at once. So again, Russell very, very weak, strong for a little bit here, and then very, very weak the entire time. And then it's barely stronger than the NASDAQ on the monthly based on those moving averages. But again, same signatures everywhere and just absolutely pathetic. So no reason to get, bullish on any of these. If you're going to try to get bullish on anything or you have to put money to work, obviously you're going to do it in the strongest, which is going to be either the Dow Jones or the S&P. Right now, tech and small cap is just not the place to be. And when I say small cap, I mean like small cap publicly traded, not like small cap like mom and pop shop down the block. So XLE Energy still very strong, hanging out at that 90 level. We know the next target to the upside is like 100, essentially right on the dot. And, the probability once something reaches 90 of getting up to 100, I mean, we're getting, very, very likely that we hit at least 100 on XLE. Still very strong. Obviously, the only or the strongest sector. XTN Transportation, week had that breakdown now. Finally have given up the 200 exponential and simple. Bouncing off the bottom of our channel right here. We blew through the 236. It's now acting as resistance. We have the 382 and again the pre-pandemic highs here, which again, if we go back here, that's the 2018 high. This is the 2020 high. So just like the Russell, we had a lower high in 2020. So it was already weak going into it. Finally put in a new high. And then it has all but come down and retested those levels. So the next target to the downside, once this does run out of steam on this bear trend, we're basically getting a bullish bounce in a bearish trend, in the transition point. And the next target would be the 382 or the yellow pre-pandemic high. And then those both actually line up with the macro 236 coming back from like way, way back in 2011. And that would just be assuming that this is actually some form of 5-wave structure or something like that. So we'll have to keep our eyes on those levels as this develops. But for now, the most important levels are the green fibs that we have in place. Financial XLF is next. Again, very weak. Bounced the bottom of our descending wedge or channel, however you want to look at it. Came back up, retested resistance. It is above the 236 for now. Next target to the downside would be the 382. Or again, if we just go back and look at our pre-pandemic highs, it is actually going to be, that will actually be our next target because it's slightly higher. So again, we have the 382 and the pandemic highs coming in right around that same level, right around like $30 to $31. So that's our target. Could potentially still have moves to the upside on a lot of these, but definitely starting to get tired. I think it's realistic to think after as much downside we've had on these indexes that we would see, at least a couple weeks worth of bounce. I mean, we basically had 1 week and then we went sideways for another week. So we'll see what happens from there. Next, we have XLV, healthcare sector, holding up a lot better than most. Basically came back up to retest the 200 exponential and simple. They have officially confirmed bearish. They did slightly right here as well. So this is basically our immediate break and retest, and they act as resistance. Now we get a push to the downside typically, and then eventually we get the reversion to the mean. So this one is still a few weeks or, a month or so behind a lot of the other things that have already rolled over bearish. So while it still looks okay for now, it's already showing like the signs of sickness. So just imagine the majority of the market has already been bit by a zombie, and the zombie infection is coursing through its body. It's already like some things are full on zombie, other things are just like getting some weird kind of like dying flesh and weird like bubbling up. They're starting the zombie process. So I would say that XLV healthcare is just now starting the zombie process. It was clearly bitten and it's going to turn into a zombie, but it's only just the beginning. As opposed to something like the Russell or the NASDAQ, full on zombie right now, running around, one of its arms missing, the legs broken, and it's kind of dragging behind. You guys know the sound that they make. You know what it is. I mean, it's definitely zombie time in these markets. That being said, though, what is the next push down going to do? Well, it would retest the support right here around like 124 or so. That's going to be our initial target. And again, this could be the weak right shoulder. We could get a little push up further, but eventually we expect to come back down to this neckline. And when the neckline breaks, that's when we would target, initially the 236 and then obviously the 382. And then again, we'll go back here and look at these levels, the pre-pandemic highs. This one is still a little ways out, obviously, so well below the 382. So, and again, this is our safety sector, so you can see how much better this is holding up than most. And then next we have XLU, again, safety sector right here. This is where the money floods to when everyone's worried about preserving capital. You're not as worried about making money. If there's a sell-off, which seems likely, you flood into the safety sectors so that, while something else goes down 20%, maybe you only go down 3 or 4%, but you're not in a position where you can just be in cash typically when you're running to these sectors, or you just don't want to go too heavy in cash. You already have a nice cash position, etc. So, that way you're not losing to inflation, because theoretically something like this is going to hold up okay. And then if there is a sell-off, you're essentially like capping the downside to some extent. So XLU still strong right now. One of the stronger sectors, obviously, as well. Slightly behind energy, obviously, but still very strong. Holding up very well, doing its job. XLP, consumer staples, holding up decent, again, right at the fair value point. So if you ask me right now and you said, hey, do you think now is a good time to buy consumer staples? Yes or no? I would say it's not a good deal and it's not a bad deal. It's fair value because it's right at the 200 exponential. It's right at the 200 simple. So you're paying fair value based on the last 200 days of price action, averaged out either with exponential weighting or with our, simple weighting. So either way, or non-weighting, I should say. So either way, you're not getting a deal right now. You're not overpaying right now based on the last 200 days of price action. But still, when I look at this, to me, I think we're overpaying right now because of what caused the last 200 days worth of parabolic price action. So for me, now's not a good time. I think we're getting ready to go to undervalued, but we might overshoot that quite a bit to the downside as we've been so further to the upside overvalued. But that being said, we are still neutral here. We haven't flipped the 200 exponential and simple bearish like we've seen. So again, what's the zombie status of XLP? I would say it's like a 2. It's like early stages. It could still recover. Maybe there's like still an antidote that it could get, but it's on the other side of town and there's some crazy stuff. The road's blocked. Not sure if you can get there in time. Maybe you ride in the back of the truck just in case we don't make it, type of situation. So there's still some hope for the XLP. It's not quite zombified yet. And then real estate, again, looking a little weaker, but one of the better sectors that's holding up. And then again, if we just look at what's taking place right here, looks like we have some, potential serious topping patterns playing out right here. We've already had a pretty nice trade play off from the right shoulder short right here. And essentially we got the beginning of the neckline break. Already did the 236 and came back up for the retest. We haven't technically, since the breakdown below the 200 exponential and simple, we haven't technically come back up and got the actual retest yet. So if this continues up and retest, it's going to look a little more stereotypical. If it just rolls over right now and goes lower, we will expect later a retest, probably back to around where we're at, because the 200 exponential and simple will be curving down. But that's typically how this plays out. And if you look at this as kind of like a topping neckline, it is very possible that we're actually going to top out here and it's going to roll over and get an aggressive push back down, to essentially maybe our pre-pandemic level. I'm sorry, we actually already hit the pre-pandemic level. So it would be the next step down, which would be the 382. And then if we come back down to the 382, which is actually our target for the trade setup, then from there, you would start looking at a potential reversion to the mean counter trend trade. If it doesn't play out right now, which I don't think it's going to. It looks pretty weak, honestly. So we'll see. Obviously, a lot of headwinds. Everybody talking about real estate. We're starting to see a lot of the early signs that the housing euphoria is cooling off. And we're probably going to go into, an overcorrection to the downside, the same way we went into an overcorrection to the upside. So DXY is next. So we see here on the daily, DXY, obviously was cooling down for a little bit. Still very strong. Trying to get back above the 821. We do have the stochastics getting ready to cross to the upside. Obviously, we're still in the bearish control zone for now, but we're getting close to leaving the bearish control zone at the 20 level, and then right around the same time we're going to get the hard buy signal. So if we do in fact break out of the bearish control zone level here, get the hard buy signal, we flash the blue hard buy right here, that's going to look like basically this was our retracement from the last move up here, and then we're getting ready to put in another leg higher. And again, that's going to correspond, if we put in another leg higher on rates or yields, and the DXY and or the DXY, that's basically confirmation of a 40-year trend break. So if we see that take place, if we see a 40-year trend break, either the DXY start taking that next leg to the upside, or yields taking that next leg to the upside, that basically, in my opinion, invalidates like every other long position potentially out there. There's still some things that can do well in either environment, but the initial reaction of those breaks, I think, is going to cause a chain reaction of weakness throughout, especially like asset markets. Again, we might see commodities hold up. We might see, various other things still do well at different times. But I think the initial reaction of another leg up on either yields or DXY is going to be, basically the big trigger for, crazy volatility, which I fully expect. And again, if we just zoom out and go to the monthly on this, we see we have taken out the previous high from 2017. We obviously had already taken out the 2020 high right here. And now we are just ripping to the upside. So, the next target to the upside, we basically have broken out, came back down, retested the 2016, 2017 high as support. And now we're ready to take another leg up. Bearish control zone, Stokes powerfully angled to the upside. All green histograms above the zero line, above the slope line. Slope line is blue. 8 and 21 cross to the upside, 200 exponential and 200 simple, both blue and cross to the upside. It looks like here we're getting ready to do something we haven't done since, the end of the trend in the 1980s. So again, we're potentially looking at, 40-year trend flipping back bullish for the first time. Taking a look at Tesla. So Tesla back at 700. No surprise. I don't know if we'll get another push up here. It's the same exact thing. Tesla is still holding up okay compared to most things, but now it's finally flipping into the bear market. So we've got the push down, we got the push back up. It sort of looks like an inverted head and shoulders, which would give us a target of right around like 880, which would essentially just be the retest. So we got the push down. We talked about entering a long right here. If you miss your opportunity or you wanted to add to that position, obviously none of this financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. If I was going to potentially add to a position, what I would do is I would look for, a potential entry and then target to the upside, which is essentially the trade that we're already looking at right here. So if we basically come back down from our head to our neckline right here, and then we'll flip that blue, that is essentially the measured move of the break line of this little inverted head and shoulders. So assuming that's the measured move, that would give us a target of 954. But we see, turning off the drawing tool, that the 200 exponential and 200 simple are right around 862 and 915. So maybe we undershoot it a little bit. Maybe we overshoot it a little bit. Maybe we come right smack in the middle right here. But regardless, that's essentially going to give us the target, which is what we're actually like our trade setup that's already here. So, obviously you're not getting as ideal of an entry, but you still have potential for, entering off of that right shoulder right there. 27% move to the upside for like the median or like the middle of that trade setup. And then again, just looking at your downside risk, entering now versus, obviously where we were looking before, you basically want to get out if we're going lower. So you're talking about a 12% risk. So, over 2-to-1 risk reward ratio, not as favorable now, but potential to add into strength as this starts to roll over. Now, what happens if this gets rejected and the whole trade setup just blows up? That's definitely a possibility too. This just sells off right now, comes back down lower, hits the stop loss that we moved to break even on the initial trade setup, takes that out, takes out the new trade setup, and then goes lower. Completely a possibility. But we did bounce the 236 perfectly, and this is the initial breakdown from the 200 exponential and simple. So I think it's more likely that we get the pushback to the upside before coming in lower. And then again with Tesla, much, much stronger than most. We have a strong support here at the 236, which was where our initial bounce was at. And then after that, we have one at the 382 right here at like 418 as well. So, does it get down there eventually? I think it does. I think it goes lower, but of all the things in the market that you would expect a reversion of the mean retest of the 200 exponential and simple right away after being in such a long bull market, converting into the bear market, you would think that there would be a lot of strength and that probably it would overperform. So I wouldn't be surprised to see Tesla all the way back at 1,000 from the 700 it's at right now. But realistically, we're really looking for somewhere around like 900 on this. But again, it could just, melt down and just go much, much lower. Who knows what Elon's up to? Never know what he's going to do. ARK, basically just looks like a textbook bearish reset. Basically has gone sideways while the indicator oscillators have trended all the way from the bearish control zone back to the bullish control zone. It's gone nowhere. Looks like it's just preparing for another leg down. NVIDIA crossed 821 back to the upside. Again, similar to Tesla, this was the initial breakdown of the 200 exponential and simple where they flip bearish. So again, typically what we're going to do is get that retest back up. So maybe as high as like 240 on NVIDIA wouldn't be out of the question by any means. And then after that, we really have to just look at lower targets. So we broke down below the 236. It's acting as resistance right now. Next real target to the downside is like 138. So quite a ways lower from where we're at right now. But I do think this goes higher first. Again, one of the stronger names. Apple, again, very strong. Initial breakdown now in the process of the reversion of the mean. Could not hold up here and get that 821 cross. So in many ways, we can see now, looking at all these different charts and how strong they are on the macro by like the big picture that we have, and then looking at just little things, subtle recent changes, like for instance, Apple breaking down from the 821 here on our Friday close, as where, for instance, NVIDIA was able to hold above the 821 and actually get the 821 cross. So we see NVIDIA is basically the same as the Apple chart, but NVIDIA is just slightly stronger than Apple is. So again, you want to expect the move back to the upside. Apple's saying, hey, maybe that move's not going to happen. Or maybe it gets a little choppier and then we get the move back to the upside. But eventually we do expect to go lower on this one as well. And then Google, again, very, very similar. Trying to get the 821 cross to happen. Hasn't happened yet. So right in between NVIDIA and Apple is Google. And again, we would expect that initial pushback up as this has been one of the stronger ones. But who knows if there's a mass flight out of these big names, maybe they go lower first and then eventually get the pushback up. Next, we have Amazon, substantially weaker now on the longer term time frame. It has broken down substantially, but again, shorter term time frames, technically this one already had its like initial pushback up from when it broke down into the bear market. So a lot of those other ones like Apple, NVIDIA, all those are sort of like at this point right here where they look like they want to push back up a little higher and then go much lower. Amazon, that's already basically played out, and now it's trying to cross 821 back to the upside for a pushback up for another reversion to the mean retest from a much lower price, obviously. So that's what we're expecting on the rest of these charts was basically the price action that happened through this area. Amazon's already way ahead of the game. And again, we talked about potential for Amazon rallying into this split. Well, it already has rallied quite a bit off of 2000, but I think that was on the 6th. Yeah. So that's probably has something to do with why it had a nice little rally here recently. And then we'll see what happens after that. Typically, you see at least a little bit of continuation, but we're in a bear market now, so maybe that's enough to push it up to 2,800, and then from 2,800, it has its little meltdown and doesn't even make it back to the 200 exponential and simple. We'll see. So Microsoft, again, we can see the comparison. We confirmed into a bear market right here, almost had an immediate pushback up, didn't make it, came lower, trying to push back up now. 821 crossing back to the upside, building up momentum. Still looks like there's a little bit of juice in the tank, but at the same time, we're running into resistance, which was the neckline of the head and shoulders. So if this does get back above it, we have to start looking at potential that this isn't in fact a topping pattern, or that the move has already played out and that's it. We didn't actually make it to the 382, but we were very, very close. Didn't even make the measure move, but again, put in the majority of that measure move breakdown. Still looks very toppy on Microsoft, but again, this one has been very strong for a long time. So if I was going to bet on one or a couple of these things retesting on the initial breakdown of the 200s, it would be the ones that have held out this long. Walmart is next. Again, very weak now. It has been chopping around sideways for quite a bit and had some choppy crosses and whatnot. Just put in the high and then immediately capitulated. So at some point in time, we will come back up here and retest the 200 exponential and simple, regardless of if we're going higher or lower. Because if we're going higher, we break through it, we go higher. If we're going lower, we retest it, and then we get rejected and go lower. The question is, where does it happen from? So I would start looking at key resistances. So we have a bunch of resistance stacked up all right around 136. So that's the area I would be careful that we're not able to get back above. Because obviously there's a gap fill all the way back up to 146. But we don't know. Are we going to fill this gap eventually? Yeah, probably. I think Walmart eventually goes to new all-time highs. But is it going to be in 2 years or 3 years after a grueling bear market that goes much lower? I mean, I don't know. It could be in a month. It could be in a week. But it also, again, it could be years from now after we go sideways to down or, much lower first. So I don't know when we fill that gap, probably do eventually, but we have a lot of resistance now above our heads. I mean, once we get to an area like this where we have multiple years worth of price action like that above our heads and we just had an aggressive move down, a lot of times the market won't give you a second opportunity to get out. So if this jumped your stop or you just didn't get an opportunity to exit this position or you were buying on the way down and now you're, massively upside down, a lot of times the market doesn't give you an opportunity anytime soon to get back out of that trade. And that's what it looks like is going to happen on Walmart and Target as well. So we'll see what happens over time. But right now they are looking very, very weak. They were unable to bounce back, even though the remainder of the, sector obviously looked like pretty strong in comparison, to their terribleness. What's going on, Christoph? Good to see you. Keep on ripping through here. If you are just tuning in, obviously none of this financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Make sure to hit that like button if you're not subscribed already. I don't even know what you're waiting for. Just do it. It's free. Hit the button. I'll wait. All right, that's all I'm waiting. So I hope you did it. Hopefully that was stern, and now you've finally done it. I don't know what you're holding out for, but do it. Do it. So gold next. XAU. So we had a nice little push up there, trying to get back above the 200s, and then we had a nice little push back down there. And again, we're still in that range. As long as we're trading at or around the 200 exponential and simple, we're basically just range bound. Obviously, what we're seeing, though, is the daily stochastics and the histogram on the TDMACD trending to the upside pretty aggressively while we basically go sideways at or in between resistance / support. So I would be very cautious right now that we're getting ready to see like a big capitulation move to the downside. Very cautious. Silver, again, very, very weak here. Broke down from key support, came back up and retested it, and it looks like it's ready to just roll back over to the downside. So again, broke support, retested as resistance. Looks like it's ready for continuation down to like 19 bucks. Gold silver ratio looks very strong, beginning of a weekly / monthly bull market. Pot stocks still looking really weak here. Had that little meltdown. I told you guys I was buying the dip a little bit. Partially for like potential scalp move, but also just because at these levels, I think any entry on some of these major pot stocks I look at, I think any entry is going to look nice in, 3 to 5 years in particular. That being said, Aurora very weak. You guys know the actual target is $140. We're at $160 now. So, we're so close. It's still another 15%. But Tilray next. Tilray hanging out at support here. I'd like to see this go a little bit lower. It has some previous support levels. It already broke through this one, So there's nothing really I see like holding it up other than this one. So I would rather get it at, it's at 420 right now. Stop it. Tilray, the pot stock, is at 420 right now. I mean, if that's not enough reason, that's got to be like some kind of omen or something, right? That's hilarious. But anyway, 249 is like the low from before, maybe slightly lower. So maybe we do come down a little bit lower than that. Looking for basically some sort of bottoming signals out of these pot stocks before I'm like ready to, you know, load up on them for big positions and, the big move to happen. They're not putting in any bottoming signals right now. Some of them are kind of at support levels, but they have been melting down for years and they're continuing to melt down. So next, Hexo, basically at the 2.236. So again, maybe it's a support, but if you thought 1.618 was support at 91 cents, since then you've lost, 70% of your money. So got to be careful trying to buy the bottom on these things, taking small positions, looking for, scalps off key levels, or else slowly building positions, CCJ. So this one's staying strong uranium stock wise. But again, we had a pretty aggressive move down. We saw a, percentage move back to the upside, dead cat bounce or retracement of the bear move. So we have a bear move down, we have a bull retracement of the bear move, and then we likely go lower. And that corresponds with what we're seeing from, our indicator oscillators. We basically bounce all the way from the bearish control zone back to the bullish control zone. But the last time we were in the bullish control zone, we were way up here. Now we're way down here. So got to be real careful that we don't see some actual bearish divergence develop and what looks like essentially a bearish reset before we go lower, which is what I think is going to happen. URA much weaker below the 200 exponential and simple. UEC, still looking more like CCJ. And then UROY has broken down, much lower. So again, we can see all these different assets or these different stocks in the same kind of space, and then look at what their relative differences are in the chart, the company, the price action, etc., the indicator oscillators, and then we get a better idea if we were going to be buying into the uranium space right now, regardless of, what we think is going to happen short or long term. If we were going to be adding to a uranium position right now, we would add to the strongest uranium position or the one with the best setup, not to the weakest one, or the one with the worst setup. Next we have Altria. Again, very strong, hasn't done much lately. Looking for a slight pullback, but definitely looking to build a position in that one as it looks like it's going into a long-term monthly uptrend. Kraft Heinz, we talked about this. That breakdown was key, and that weekly close below that support was key as well. So we'll see what happens this week, but that's not what you want to see happen. You don't want to see it come up to 200 exponential, lose the 200 simple afterwards, and then break down from this ascending support line. But we see this happen very, very often where you'll break down from a key level, you'll gap back up, be back on top of support, start moving back to the upside, retest resistance, chop around, and then go much higher. So don't want to get bearish on this after the breakdown, but you want to be conscious that, look, there's a really good possibility that Kraft just suddenly loses 20% of its value, goes down to $30, and then we get that beautiful entry that we want. And that's what we really want on this. We want that entry. But again, if we break down, we have to be conscious that, hey, we broke down from a key support that's been holding up since, early April of 2020. So if we lose that support right here, and we do get our entry right here, that entry might not hold up and it might just go to new lows. So, it's important that we pay attention to our invalidation points, what we're expecting to happen, and what would cause us to say, hey, I don't want anything to do with this, versus, hey, this looks great for the next, months from now, years from now even. But when it's all said and done, essentially this thing has been melting down since 2017. It bottomed in 2020, and now it's right at the median. The 821 have basically been crossing to the upside and to the downside, and it's just trying to decide, do we go up from the 382 right now, or do we go down to the 236 and then make up our mind? And if we go up from the 382, if we tap this 0.5 a third time, I mean, the likelihood is that we break through it. And then at that point in time, you're looking for this thing at $53. And that's, about 50% from where we're at right now. But obviously, we'd much rather get it down here at like 29 before it goes up to, potentially 53. It's a difference between a 50% move and, a 90% move. But again, the setup looking pretty good on this one, but could easily invalidate over the next, I would say this week is the big decider for craft. So that's an exciting one. And then on to the cryptos. The cryptos. Also, Bitcoin futures chart. Nothing has happened, unfortunately. So there has been no changes whatsoever on anything since we last. Well, we looked at this on Friday, and it basically just closed at the lows. So nothing much to see here. The spot chart over the weekend didn't really do anything. Just kind of went sideways, floated up a little bit, right back around that same level. We are getting a hard sell signal now on the daily. So basically what's been happening is we got the hard buy out of the bearish control zone. Price action went sideways completely. The indicators have trended all the way to the upside. Both stochastics trend all the way to the upside. And now the blue stochastic has crossed back down and given us this hard sell signal. So basically a bearish reset took place. All green histograms for day after day after day, week after week. Blue slope line. And normally that would say, hey, momentum is picking up and we're potentially going to start moving to the upside. We need to cross 8 and the 21 back up, and then we can start threatening some of these previous highs and, maybe retesting some of these previous lows. But that's just not what we're seeing happen right now. So it looks like what this wants to do is come back down and sweep the lows again. And when it sweeps the lows, what it's going to test is, does the support hold up? Because the resistance broke technically right here, through this area. We broke up, but then there was no buying came in. It looked bullish. We had a bullish setup, a bullish break. There was everything, every opportunity for a pushback up here to like the mid to high 30s, and just no buying came in. Instead, a bunch of selling came in. So at this point in time, we're going to retest the highs of the lows, and it's just a matter of what happens. So the fact that we just retested the highs and then came straight back down tells me that more likely than not, we're going to retest the lows now. So, not possible. It's not impossible, that we don't go back up to like 32K from here. But, the target to upside was 32.5, and we basically hit it exactly. That's where I took profits on my position. Obviously, as I was telling everyone in advance, that was the target. I'm pretty sure we talked about it quite a bit on stream, but obviously that was my post in group. 32.5 was my target. I think I ended up getting out slightly before that, but I always front run because I'm just not greedy. I'd much rather just lock in the gains. But that being said, looking pretty weak right now. It's trying to build up some momentum. I don't like to play against the bullish cross right here, but, again, it's a counter trend, slope cross right here. So we're still very much in a bear market on the daily. On the weekly, very weak. It looks like we basically came down, retested 200 exponential, and then we're just kind of hanging out. We want to see a strong rejection and then continuation back to the upside. That's not what we're seeing. We're seeing kind of like a rounding bottom that's just kind of hanging out. It's not usually how markets bottom. And then next on the monthly, we're far below the 8 and 21 at this point in time. Putting in new lows, at support. And we have basically one candle between us and 20K right now. We have one monthly candle between 30K and 20K. So all the momentum is to the downside right now, with the 821 getting close to across to the downside as well. It really, really looks like we're going to 20K. I'm not going to tell you guys what to do, but if you're not protecting yourself right now from a potential, 33 to 50% drop, you're being reckless, in my opinion. This is the most important time to have some form of hedge or, safety situation in play. ETH looks very weak, all the way back at those lows right here, the equivalents of 30K. It basically looks just like Bitcoin does at this point in time. Very, very similar to Bitcoin. Does not look good. Slightly more momentum on the daily for Bitcoin than Ethereum though. Bitcoin dominance chart on the weekly. So, we've already confirmed the breakout. Now we closed another week above the previous high here. So we already know the next thing we look at is the next previous high here, which we're already almost at. So 47.57, already almost retesting it. So realistically, as soon as we blow through that, we're essentially looking for the measure move of our little channel. And then after the measure move, again, we would expect consolidation at each of the resistances, but then eventually we expect a retest of the 200 exponential and simple all the way up at 56%. So next key targets to look at are slightly above our heads, about 48, and then we've got 51, and then pretty much 56. Looking very, very strong, building up some strength here, and looks like we're going to see that continuation. And that's probably, that's not going to bode well for altcoins, obviously. Total market cap looks exactly like the Bitcoin chart. So just pretend like I was talking about total market cap and just listen to what I said about Bitcoin. Avalanche, very weak at the lows. I mean, it's been getting crushed though. I mean, are some of these trash bag cryptos getting ready to have a bounce? Honestly, I mean, it looks like they want to. It really does. I mean, we'll really see what the markets shape up like this week. If we see a continuation in the stock market up to resistance, which I think is likely, I would imagine that's probably going to translate with a decent little pushback up in crypto. Now, when I say a decent little pushback up, I mean, what am I talking about? You know, at this point in time, like 31K, 32 if you're lucky. I mean, the last push was 32.5, so I don't want to get too excited here. But Avalanche, you know, where would a close above 25 and we can start looking at 29 for Avalanche. So that's a nice little like 15% move. Matic, you know, holding that support nicely. Again, a close above basically 61 cents. We're talking about 65 cents. After that, it's got quite a bit of, let's start putting in some, you know, I don't want to get overly bullish in advance right now, but let's start respecting the fact that we could actually get a decent up week in crypto. So the next target would be that 236, maybe like 75 cents, 65, then 75. And then after that, you know, 98, a dollar. These moves look pretty likely right now. We are building up support. I mean, man, again, I don't want to get too bullish right now. Really want to see how like Monday looks. But I'm definitely seeing some potential here for a little bit of upside in crypto along with the stocks. Solana looks pretty weak. I mean, really needs to get above $40 to even try to get bullish on this. This is a tough one. I think right now Solana's just got to be avoided with like, you know, the fundamental issues they're having on the actual project itself. There's so many other cryptos that are just regular cryptos that don't do anything. They're not like failing at the one job they have. So I got to just say for now, Solana's just not ideal. XMR, Monero, again, consolidating back at the 200 exponential and simple, showing some weakness now. But, I mean, if it consolidates here long enough, maybe it pushes back up here again. You know, I mean, it came back down inside of this channel. But, again, the macro picture on Monero still looks eerily like a potential, like, cup and shoulders. I'm sorry, cup and shoulders. That's a new one I just made up. How about a cup and handle? We'll see though. You know, don't want to get too excited on this one. It looks really bad on the monthly. That's the one thing that just makes me really, really hesitant on Monero. Is it just looks so bad on the monthly. This monthly close here is just the absolute worst possible scenario. Closing back at the 21 and then seeing another push down. And the gap between the 8 and 21 is getting pretty thin. And if this crosses 821 on the monthly to the downside in the bearish control zone with all red histograms, I mean, you can't make a bullish case for that, honestly. There's nothing more that can be said. Once that cross happens, it's super bearish. Super bearish. Especially in crypto because most things it's never happened before. So, you know, potentially the algorithms get in there and, you know, we could just see like massive capitulation moves. So Algo bouncing the 618 almost perfectly. Again, I would expect it to find support at this level. You know, this one really could be. I wonder if these cryptos are getting ready to have a little rip. Between the 236 and the 0.5, you know, this thing could put in a decent little bounce here, you know, and relatively fast as well. So from where we're at right now at like roughly 39 cents, that's 34% and 42% upside. And we're basically at the lows. So the potential for a decent, damn, I thought that was going to be high enough. Apparently not. The potential for a decent trade setup from this level, just because we can run such a tight stop and it found support there pretty strong. I would go, honestly, I would go from the low, but a close below that low, not just a wick. 13% downside, and then my upside target would be not 130%. It would be like roughly like 37, 35 to 45. You know, around like a 3-to-1 risk reward ratio for the retest of the 236 from the macro high to our recent low. And then realistically, you know, again, don't want to get too excited right now. We might see this thing just melt down tomorrow, and I wouldn't be surprised. But the next target to the upside is actually the 382. And again, both 382s line up right there. That's like 100% move to the upside, 78 cents. So seeing some potential for a trade setup here on a couple of these trash bag cryptos. XRP still looking rough. Man, this thing looks so terrible. Yeah, I would just honestly, the weak ones right now, sure they could have a big move because they're so weak. But man, I mean, there's just, I would rather something that other people are going to get excited about. I think it's hard for people to get excited about XRP. Cardano had that nice push up. It's trying to get the 821 cross, trying to build some momentum. Cardano looks like it wants to move back up to 236. We hit the 382. We got our target. Shouldn't get greedy on this thing. You know, it's obviously a trash project. Obviously, Charles Haskinson is a bum loser. But 57% looking pretty likely right now. So again, don't want to get too excited, but with 821 cross potentially right here, you know, and that being a clear resistance, you know, you got to be careful of like a little front run off that little low right there. Maybe 78 cents instead of 90. But it's still at 58 cents, so there's definitely something there. Kyber network, just putting in basically a, you know, essentially a flag pattern right here. We don't know which way it's going to break, but when it does, it's probably going to be aggressive. I mean, so we had a really aggressive push down here, pretty aggressive push back up, and now we're just, you know, basically putting in a like a little triangle action. So when we do break in one direction or the other, probably going to be pretty aggressive. Looks like it wants to actually break to the upside, as crazy as that sounds. You know, which essentially, you know, we just start looking at the recent highs, you know, $2.32, then, you know, obviously the 200 moving averages, then $2.70. It's not impossible to think that this actually has more upside potential from where it's at right now. So we already retested the 618 once, though. Are we going to come back up and retest it again? Maybe, maybe not. I mean, so, but again, we got to be careful here. We're at the 382. The downside target is a 236 for an entry to retest, or potentially an entry from here for the 0.5 or the 618 retest. So some of these cryptos are actually showing some potential. They're trying to carve out some kind of support right here for moves. We see hacks continuing to melt down as expected. So I said it last stream, you know, once we started closing back below here again, I expect it to come back out and fill out this price action. So, you know, 3.8 cents on hex is still the target to retest the lows, as it's basically just capitulated here. You know, obviously trash, completely melting down. Waves looks, I mean, it's at resistance right now, having a tough time trying to get through this area. You know, but arguably it has some decent support here as well. If it can hold this area, it's going to start looking decent. The 821 have already crossed back to the upside. So is there some potential here for $15? Yeah, that is a 100% move from where this is at right now too. Not sure we're going to find a trade setup from here though, to tell you the truth. You have to just basically run a tight stop loss and say, look, if the 821 start breaking back down, I want to be out of this. But that looks like that's the trade setup right now. You know, I would run it with a super tight stop loss and just get stopped out, because it's not even, I mean, it's not even that tight percentage wise. It's just tight, like, you know, based on where you have to pick from, because we had such a powerful move already to the upside. I mean, if this area holds right now based on candle close, you know, you could put in like an 11% stop loss at like 753, and if that holds, there's still upside potential. But you're talking about 73% upside, so 6.6 to 1. So sure, you get stopped out, but you can take this trade 6.5 times. And if you're right once, you're at least breaking even. But again, realistically, you know, what you want to happen is for the momentum to keep trending to the upside, price action to trend back down, and then hit support. And then really, that's what we want. We really want that, because that gives us the retest. The retest holds as support, and then the real move we get is essentially that retest right there, and that's even juicier. That's 150% target to the upside. With again, it's a slightly more stop loss on it, but much more juicy of a trade. And the momentum would keep trending to the upside. It would basically look like a retest of the downside. The Stokes bounce, the histogram bounces to zero. We see blue slope line continue to the upside. The 821 starts to cross down, come back down to support, fake out, continuation back to the upside. That's the real trade right there. Just because it's already come so far. But again, a real type stop loss and a nice little move to the upside. And I'm sure you wouldn't be mad about that one either. So some price action here. So VPCI properties. I think we were talking about this on the last one. This was a request. Nothing really changed here. So the indecision candle on the daily, and we talked about how basically it looked like the 786 is probably going to be the top for now. If it goes higher from here, I expect new all-time highs. If it goes lower from here, we're looking to enter at one of these lower targets, preferably like the 382. All right. That was it, right? We ended on crypto. We did it. We made it to the end. Good job, bros. And potentially lady bros. That was a nice quick one. We ripped through there. We'll have plenty to talk about on Wednesday's stream, though. Definitely looking forward to that, as I have a feeling we're going to see quite a bit of excitement in these markets, volatility in the next week or so in particular. But I do want to start keeping these streams a little bit shorter, trying to keep them around like the 1 hour to an hour and a half mark, just so they're a little more digestible as we're doing 3 a week. And I know, it's not easy to dedicate a bunch of time in a not as exciting market. Prague says, could we look at VXTR, PayPal, and DraftKings? We'll take a quick look at it, man. Take a quick look for you, brother. Uh-oh, maybe not. What's going on here? TradingView being... Yeah, I don't know what's going on with TradingView. It's forever loading. Probably overdue for another reboot. Quote unquote update. Yeah, it's not working, man. It's just like forever loading. Just remind me on Wednesday, and we'll put them on the Wednesday stream. And if you are new to the channel, obviously make sure you check out the live streams every Sunday and Wednesday, 8 p.m. Eastern Standard Time. Every Friday, 11 a.m. Eastern Standard Time. Yeah, no problem, man. It's stupid. Sometimes, whatever it is between the browser and TradingView, if I don't like reboot my computer, once every 22 minutes, it like doesn't want to load once I have. Maybe it has to do with 100 windows being open. I don't know. But yeah, we'll take a look at them. But yeah, gonna go ahead and wrap it up there. Appreciate everybody for tuning in. Make sure to like and subscribe. If you are interested in the group and indicators, feel free to reach out to me about those. What's up, Nurho, man? Van Houteng? Man, what you think about daily charts on corn? I can't bring it up right now because it's acting a fool. It has been looking pretty stellar, but again, it won't let me bring it up without rebooting. So I can't really look at any more charts right this second. But a lot of the commodities have been looking really strong, but they've also run quite far as well. So we could definitely see some pullbacks in the commodity space. Nice, man. Glad to hear. Awesome. Glad to hear, man. But yeah, going to go ahead and wrap it up there. Remember, none of this financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. That is it for today. It's going to be a big week in the markets. Definitely going to be some gains to be made. Looking forward to some big, juicy trades this week as well. So I'll see you guys on Wednesday. I'll see the group members in the chat in the meantime. But that is it for today. It is Sunday, 9 p.m. Eastern Standard Time on June 5th, 2022. This is Crypto Trend Trader, and I'm out of here. Peace.